Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from January 26th to January 30th, 2026. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from January 26th to January 30th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with German IFO business climate, US durable goods orders, and US Dallas Fed manufacturing index. Tuesday brings Australian NAB business confidence, US CB consumer confidence, and US Richmond Fed manufacturing index. Wednesday features a major day with German GfK consumer confidence, the Bank of Canada interest rate decision where rates are expected to hold at 2.25%, the Federal Reserve interest rate decision also expected to hold at 3.75%, followed by the Fed press conference. Thursday includes Japanese consumer confidence, US initial jobless claims, US factory orders, and Japanese retail sales along with industrial production data. Friday concludes with a packed day featuring Australian PPI data, German GDP figures, Eurozone GDP data, German inflation figures, US PPI data, Canadian GDP monthly data, and US Chicago PMI. This week's key market-moving events will be the Federal Reserve interest rate decision on Wednesday, the Bank of Canada decision also on Wednesday, and the Eurozone GDP and German inflation data on Friday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on gold, XAUUSD, and the US dollar against the Canadian dollar, as both instruments show strong trending moves and face important central bank decisions. Let's start with gold, XAUUSD. Looking at the daily chart, gold is currently trading around $4,988 per ounce, showing exceptional bullish momentum. The price is moving higher strongly after creating a new all-time high last week, trading well above the 20-day moving average. The stochastic oscillator is currently consolidating near the overbought area, indicating strong buying pressure but also suggesting a potential pause in the rally. Looking at key levels, gold has support at $4,868 and $4,757, while resistance can be found at $5,132 and $5,241. Wednesday's Federal Reserve interest rate decision will be the most significant event for gold this week. The Fed is expected to hold rates at 3.75%, but any dovish commentary or hints of future rate cuts could provide further support for gold prices. The break to new all-time highs is a powerful bullish signal. With the price significantly above the 20-day moving average and the stochastic near overbought levels, some consolidation would be healthy before the next leg higher. However, if the Fed delivers a dovish message on Wednesday, gold could push toward the 5,132 resistance level. Friday's US PPI data will also be important for gold traders, as it provides insights into inflation trends. Now, let's turn to the US dollar against the Canadian dollar. On the daily chart, the dollar-Canadian dollar pair is currently trading around 1.3698, showing strong bearish momentum. The price is moving lower strongly, trading below the 20-day moving average, confirming the downward trend. The stochastic oscillator is currently consolidating inside the oversold area, suggesting the pair may be approaching a potential reversal point or at least a temporary bounce. Looking at key levels, the US dollar against the Canadian dollar has support at 1.3644 and 1.3594, while resistance stands at 1.3745 and 1.3790. Wednesday's Bank of Canada interest rate decision will be crucial for this pair. The BoC is expected to hold rates at 2.25%, but the tone of the accompanying statement and monetary policy report will be closely watched. The strong move below the 20-day moving average indicates solid bearish momentum. However, with the stochastic consolidating in oversold territory, traders should be prepared for potential short-term bounces. The 1.3644 support level will be important to watch. Friday's Canadian GDP data is expected to show growth of 0.2% month-over-month, which could provide support for the Canadian dollar if confirmed or exceeded. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's central bank decisions, as these events can cause sudden spikes in volatility and potential gap risks. Gold traders should also pay close attention to any changes in Fed rhetoric regarding future policy moves. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.